Hey, good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, May 19th. We didn't have any action yesterday, although we did put on a correlation trade, which we're going to go over in a minute. So what you're seeing here on the screen. First, this morning's economic data came out, was housing starts and permits. Now, yesterday, housing numbers came out yesterday from the National Association of Home Builders, which missed the estimates. This morning, housing starts and housing permits came out much better than expected, blew away estimates, and everyone on Wall Street, and I'm sure you'll see it on the news tonight or read about it, how great the numbers were, best numbers since sometime in 2007 before the financial crisis for housing. One problem. One, you have sales of new homes just announced a week or two ago were miserable. National Home Builders Association yesterday missed numbers, terrible. Okay, housing starts permits, great, sound all rosy. If you put a chart out there and compare it to lumber prices, they should be in correlation with each other for the most part. They will vary from time to time, but even when they vary, they don't vary that widely. Just like you're seeing here, this correlation between these two pairs, you would have a correlation between housing starts, which are actually houses that are started building, and lumber prices. So if housing starts are going up, lumber prices should be going up. If housing starts are going down, lumber prices should be going down. Well, we now have, at this juncture, the housing starts, which rocket for the month of April, and lumber prices sink. So unless they're building homes out of a material that I'm not aware of, and lumber is going to the wayside, not going to be used anymore, there's a massive confusion here. So either the government statistics are correct and the lumber prices are incorrect, or vice versa. You have to believe the lumber prices. Now, what drives the lumber prices? Well, obviously the supply and demand of the lumber, and then the people down on the floor that are going to be trading lumber prices. So it could very well be that that money chasing lumber prices, the shorts took over and hammered it down, and we're expecting bad data. We will see if lumber prices reverse with that numbers from May, or throughout the course of the month of May. I don't know what's going to happen, but literally since the end of last year, lumber prices have been going down, and down sharply. December, January, February, March, and April. April, they may have stabilized a little bit, it looks like. But the housing starts rocketed for the month of April. They were down terrible in February. March, they kind of tried to level out, and then they jumped up in April. So we'll see what happens there. Let's go over our trade here. We had, like I said, no scalp trades this morning. There was a ton of news. I mean, there was that data that was coming out at 8:30. Then there was one of the central bankers that work for the Bank of Canada were speaking at 10 o'clock. There was also some minor data that was coming out, I believe, at 8:55 a.m. So it was just a lot to try to avoid when it comes to scalping. So we didn't take any pure scalp trades, and we didn't really have any swing trades. But we did have this correlation trade, which we announced yesterday as a signal. It goes out. Had plenty of time to put it on. It's, as you see here, it's a long between the Canadian dollar, Japanese yen, and a short of pound yen. You could see how this correlation had gotten wide. We put on half our intended size. The spread in the correlation was about 600 pips. Over the past year or so, one time it got to about 800 pips. So it could have very well gotten a little bit wider. So we put it on, like I said, about half our intended size. And that was yesterday afternoon, I believe we put it on, late morning yesterday afternoon. We did get out of it. We came in the office this morning and got out. And you'll see it looks like the spread didn't narrow too much. But if I change this to, sorry about that. If I change this format bar chart, or instead of doing candlesticks, that would be hard to see, but a bar chart, you'll see how it was dipping down. Now this is a daily chart, so early this morning this had dipped all the way down to 104. Meanwhile, this was hovering. So we had a massive, not a massive closing. I mean, you could have a massive closing would be if they were touching, but we had a good closing, and we picked up on the pound to yen, which we were short. We actually picked up 163 pips, and on the Canadian dollar Japanese yen, we lost 51 pips. So total, we were up about 112 pips. Adjust that for size, we were up 33.6 pips. So we'll take that all day long, and we closed it out this morning when we came in the office about 7:15 or so. So we'll take that and we'll move on. If you're still in it, I'm sure you're going to get another chance to close this out. We do believe that the correlation is going to get extremely narrow or even touch over the coming days, weeks, or a month or so. So if you're still in it, no reason to get out. We saw the good profit and we took it. If anything else comes out today, any signals, they'll be coming your way. If any correlations come out, they'll be coming your way. And we'll be back in action tomorrow, assuming we get some trades. As of right now, we'll be sitting in cash, and we'll kind of see what develops throughout the rest of the day and this evening. Have a great rest of your day, and good luck if you're trading now. Good luck.